Greetings, everybody. Welcome to Liberty Call. Today is Thursday, February 9th, 2023. Hope everyone's having a fantastical day out there in the interwebs. I know I'm a little bit late. My wife had a conference call and she didn't want me stealing up all her bandwidth with my recording. So about 15, 20 minutes late, but we'll let it slide this time. All right. Well, if it's your first time watching this amazing show of financial genius, please give me some thumbs up, likes, shares, subscribes. I greatly appreciate it. And ugly day here domestically. It was red all day here in the markets, but let's see how the rest of the world turned out. Let me bring up a chart here. All right, the Dow Jones was down 0.73%, closed at 33,699. SP 500 down 0.88, closed at 4081. NASDAQ down 1.02%, closed at 11,789. Small caps are down 1.19. VIX is up 5.5% today. It's back up over 20, which is the yellow warning zone. It's at 2071. Canada was down 0.4. Brazil down 1.77. Mexico down 0.61. A little bit better across the Pacific. Germany was up 0.72. UK up 0.33. France up 0.96. The Euro Stoxx up 0.97, Netherlands up 1.16, Spain up 0.18, Italy up 1.26%, Switzerland down 0.52, and Portugal up 0.39. Russian exchanges were mixed. The MOEX was in the green, up 0.47, the RTSI down 0.39. And the overnights in Asia, Japan was down or basically flat at down 0.08, Australia down 0.53. Chinese markets mostly green. The Shanghai was up 1.18. The SCSE component up 1.64. China A50 up 1.24. DJ Shanghai up 1.25. Hang Seng up 1.6. And the Taiwan weighted, the lone ugly spot in the Chinese markets down 0.12. All right, so that's everything in the investment markets for trading day, February 9th. So most of the world did pretty well, except for us. But we're dealing with our own problems here. So, all righty, let's get to today's market recap. It's titled Dow Closes as Yield Curve Inversion Deepens to Rattle Stocks. Let me bring up my notes. Dow Jones Industrial Average closed lower today after cutting intraday gains as the ongoing slip in Alphabet and fresh warnings from the bond market weighed on investor sentiment. The 2 to 10-year yield curve inverted by 85 basis points, the deepest inversion since the early 1980s. And I was a wee one back then. I was, probably this tall. Let's see here. The strong labor market has belied these concerns, but following jobless claims data released today, there are suggestions that the recent surge in layoffs will start to push claims higher later this year. And I've been saying that. I said jobs is a lagging indicator, so you don't usually see high unemployment at the beginning of a downturn, a bear market, recession, whatever you want to title whatever market cycle we're heading into. So yeah, it'll be on the back end. Usually unemployment will continue to rise even as the equity markets, even maybe the bond markets start to recover. It could be 6 months of, going through that churn of, getting those people who were at the very last or at the end part of the downturn back to work. So, all right. Alphabet was one of the biggest drags on the market as the impact of its underwhelming event continues. The event was deemed disappointing by UBS, who noted that the company failed to directly respond to Microsoft's integration of ChatGPT into Bing Search. Financials also weighed on the market, with bank stocks pressured by the inverted yield curve, which tends to keep a lid on bank lending margins, profitability. Bank of America, First Republic Bank, and Citigroup led losses in financials, while Willis Towers Watson added pressure despite reporting better than expected quarterly results. The consumer stocks were kept above the flat line due to a rally in casino stocks following better than expected results from Wynn Resorts and MGM Resorts International, while Disney Company reversed gains to end lower after reporting quarterly results that topped Wall Street estimates, but also announced a restructuring plan that will result in about $5.5 billion in cost savings, including 7,000 job cuts. And I think I did the math on this yesterday. I think it's a very small percentage of the Disney workforce that's being laid off. It's probably between 1% and 5%. So I I wouldn't consider that, huge or anything really to get too torqued up over. I mean, most companies could probably fire their bottom 5% every year. And, with attrition and, people retiring and job changes, you're going to wind up filling those positions within 12 or 18 months anyways. So, I mean, it's probably a good strategy anyways. Just fire your bottom 10% every year and bring in fresh blood. But, most people probably wouldn't like that. All right. The cost savings measures appear to be to appease activist investor Nelson Peltz, who said he would end his proxy battle for a board seat. Affirm Holdings, on the other hand, was punished after its fiscal second quarter results fell short of analyst estimates, and the company announced it would cut about 19% of its workforce. All right. So good news, bad news. Some things are good, some things are bad, but that's just the way things are right now. So, all right. Got an article here about the jobs numbers. U.S. initial jobless claims rise to 4-week high as layoffs build. All right. On Thursday, the Labor Department reported an increase in the number of jobless claims. Initial jobless claims rose to 196,000 from 183,000 the previous week, higher than the 190,000 expected, but still remaining at a historically low level. Continuing claims came in higher than expected at 1.688 million, up 38,000 from the previous week. Despite this modest increase in jobless claims, the labor market remains strong with plenty of vacancies for newly laid off workers to take. The latest data shows the job openings in December rose back above 11 million. I think we covered that in some recent articles. And the latest labor market report revealed that the labor market had been consistently stronger than it appeared at the end of last year, with the Labor Department raising its estimate of total non-farm employment by over 500,000. Matthew Martin from Oxford Economics stated in a note to clients that, quote, the latest data shows a modest pickup in the level of jobless claims, but claims continue to signal a tight labor market despite any headline-grabbing layoffs of recent weeks, end quote. He believes there is still, quote, plenty of momentum left in the labor market, end quote, and that the Federal Reserve is still on track to raise the target rate for the federal funds again in March. The Federal Reserve has repeatedly stressed the tightness of the labor market since the fading of the pandemic to justify an aggressive policy tightening cycle, which has now taken rates back to 4.75%. Fed officials continue to indicate that they expect at least one more hike before pausing that cycle. In conclusion, despite the modest increases in jobless claims, the labor market remains strong with plenty of vacancies and job openings. The Federal Reserve is still expected to raise the target range for Fed funds again in March. Stay tuned for further updates. All right. And then one last bit here. I got an article here. IRS tells taxpayers in 22 states to hold off on tax filing. So let's see what that has to say here and why. The IRS is causing confusion for millions of taxpayers in 22 U.S. states, including California and Colorado, who received tax rebates last year. The agency has asked these taxpayers to hold off on filing their taxes until it can clarify whether those rebates and special refunds are taxable income. Around 16 million residents of California received $350 of middle-class tax refund, and that's in quotes, checks as part of their state relief package to help cope with the inflation. At least 22 states authorized tax rebates last year with their coffers boosted by economic growth and federal pandemic aid. However, these windfalls are disrupting tax season for millions of Americans who count on timely refunds to pay down debt and make purchases. Let me stop here. If anyone's getting more than $100 back from the federal government, you are doing your tax withholding wrong. You would rather write them a check for $1 if you could. You don't want them holding on to any of your money any longer than you have to. If they didn't penalize you and assess a bunch of nasty grams and things that you would get, I would I'd give them no withholdings until April 15th of the following tax year, because technically, in my view, they're not entitled to a damn thing until they actually, until it's due. But unfortunately, it's not the way the system works right now. Let's see here. Adding to the confusion, federal government tax rebates, which were sent in the form of 3 stimulus checks, were not considered taxable income by the IRS. The average tax refund for the 2021 tax year was almost $3,200, a 14% increase from the previous year, according to IRS data. The best course of action for taxpayers, according to the IRS, is to wait for further clarification on state payments and not to amend previously filed returns, as amended returns are caught in the IRS backlog, leading to processing delays. And let's Scroll down here to the states. They were nice enough to put them all with no spaces. How nice of them. Alaska, Arkansas, California, Colorado, Connecticut, Delaware, Florida, Georgia, Hawaii, Idaho, Illinois, Indiana, Maine, Massachusetts, Minnesota, New Jersey, New Mexico, New York, Oregon, Rhode Island, South Carolina, and Virginia. So if you, and I have a lot of clients in a lot of those states. So hopefully you're watching this and you haven't filed your returns yet. You probably have just gotten your 1099s anyways. So, but if you have, maybe, if you've already filed, I'm not quite sure what you got to do. Maybe there's a link here in the article that I missed, but, definitely hold off until you get some clarification from the geniuses at the IRS, those parasites who bleed us dry every year. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. Hope everyone has a fantastical evening, and I will talk to you guys next time. Adios.